All right, good morning, everybody. Hope you're all having yourselves a fantastic start to the AM here. Happy Tuesday. Does not feel like a Tuesday for whatever reason, but hope you're all having yourselves a great day and are ready to keep compounding away here this morning, right? And focusing on basically just becoming the best traders we can be. I think with trading in general, it's one of those lifelong pursuits that requires like a level of competition, and not a level of competition with other people, right? Or other traders or anything along those lines. It's a competition between me, myself, and I, right? So I'm always competing with myself over becoming the best version of Michael, right, that I can be. And the market is tremendous at highlighting my flaws, highlighting the things that I need to fix, and highlighting the quirks and features that are incredible at costing me money, right? And the more I can commit to becoming the best version of myself, the more that my P&L is going to reward me for those decisions. You know, over the last 4 or 5 days here, or say 3 or 4 days, everyone has been sending me their, 5 things that they want to work on, right? And I think that the common theme throughout those, we'll call it, tasks, right, that we've established is that we generally want to fight back against our greed, right? We want to fight back against our fears. We want to fight back against our anxieties. And the market is incredible at highlighting to us what those flaws are, right? And the more and more that we can take advantage over each day as being a learning opportunity versus a P&L opportunity, easier it is for us to be generally successful in the market. So it's not always going to be pretty, right? It's not always going to be sexy. It's not always going to be this flashy style of life. It's about basically behaving the way that we're saying we're going to behave and remaining in control, and gamifying that a win as a trader isn't necessarily a P&L thing. A win as a trader is, doing the things that we say we're going to do. And oftentimes, right, that gets very murky when we've taken a loss, right? The sting of a red trade makes it feel as if our, progress is over, right? Or that, oh my gosh, I'm not as far ahead as I want to be, or I'm not doing this, or I'm not doing that. And that death of hope is a self-imposed feeling versus a reality, right? A $500 loss or a $1,000 loss or even a $5,000 loss in the grand scheme of things, right? When we look at things over the course of a year, 5 years, a decade, is ultimately not that significant, right? And it feels incredibly personal in the moment. It feels terrible, right, at the time. And when we give it that power to then influence our next decision, we then turn that, 5K loss into a 10K loss, and then a 20K loss, and then a 50K loss. And then all of a sudden we have no choice but to give up. And it is understanding that we are fully in control over all of our decisions, right? If I have a losing trade and I choose to revenge trade to try to make my money back because I wasn't happy with that loss, that was a choice, even if it's one that I made impulsively and one that I made almost like without thinking about it, right? So it's the idea that I need to commit to that pursuit of excellence, of remaining in control, of making decisions that are best for me long term, not what feels best for me in the moment, then I can set myself up to be much more successful as a trader. And that's the commitment, right? It's the commitment that win, lose, or draw, I'm going to choose to learn from my decisions. I'm going to learn and force myself to get better. And I'm going to put myself into situations where I'm going to make new habits and I'm going to commit to that pursuit of excellence. And it's not excellence from a P&L perspective, right? That takes care of itself. It's a pursuit of excellence, of behaving the way that I want, of trusting myself, right? Of believing in myself, of being the trader and the individual that I know I can be. And that is ultimately what I'm competing, right, against. I'm not competing against any individual. I'm not competing against Warren Buffett. I'm not competing against market makers. I'm not competing against the other social media traders. I'm competing against myself to live up to the potential that I know I have. And the more that I relentlessly pursue that objective, the better things go for me long term. Although I didn't necessarily play baseball to a very high level, I played it in high school. I think there's a lot of parallels with trading and with baseball, right? Where you can strike out, you can have yourself a terrible day at the plate, and then you'll hit a home run, right? The next time you're up at bat, and you'll have yourself a great day, and you'll forget about sort of the stress and anxiety and the pain and the torture, right? Maybe not performing as well as you would have wanted. But, if you start to then go 0 for 3 at the plate and you start chasing pitches outside of your zone, right? You start chasing balls instead of strikes, then you're going to just compound and make things worse and worse and worse, and your batting average is going to become atrocious. And so my objective as a trader, right, is to find what my strike zone is and to only swing at pitches inside that area. And when I make contact, it's going to go well, right? Even if sometimes it's a pop fly, even if sometimes it's a ground ball, when I control those variables well, I take advantage of what the market is going to give me. And right now, we're dealing with a market that has a tremendous amount of euphoria. And with that euphoria, you get the worst of our anxieties, right? We want to chase things higher. We want to short slow markets. We want to behave irrationally instead of remaining in control. And so today is all about making sure that we don't succumb to those temptations, that we focus on becoming the best version of ourselves, and that we commit to a level of excellence that would make most people uncomfortable. I've said this before, and I will say it 1,000 times again, but if I want to be in the top 1% of anything, I can't behave like 99% of other people. And from a trader's context, that means that I have to commit to not obsessing over my P&L, right? I need to commit to learning from my decisions. I need to commit to not revenge trading. I need to commit to following my plan. I need to commit to becoming the best individual that I can possibly be on a day-to-day basis. And then, right, I will set myself up to be tremendously successful. And so that is always the objective, right? That is always the target. That is always the thing that I want to focus on, because if I play that long-term game, I will achieve what I want. And when I ignore those long-term rewards for a short-term prize, okay, maybe I'll get a little bit of a reward here and there. Maybe I'll get a good outcome. Maybe I'll get a nice win, but then I'll give it all back, right? The second that short-term prize becomes more important than the long-term outcome. And so I would challenge everyone here today to adopt and embrace that long-term mindset, right? What can I do here today that sets me up for success tomorrow, next week, next month, next year? And how can I make sure that I'm putting myself in those situations where I'm not allowing short-term noise to trick me into doing things that I don't want to do? So with that being said, looking forward to having a fantastic trading day with you all here this morning, and looking forward to really taking advantage of what should hopefully be a market that gives us some nice tradable opportunities. And if it's the same like we had yesterday, where we had to take our small wins and we had to commit, right, to trusting our plan instead of trusting our P&L, then we're going to do just fine. And we're going to keep finding that balance, right, between allowing things to play out and not letting winning trades turn into losing trades. Last 3 days, right, have been relatively choppy. And so it's about not allowing that to now trick me into doing something that ultimately sets me back long term, right? So today, looking forward to having a tremendous day with you all. And yeah, let's get after it. So first things first, right? Economic calendar here this morning. It's a relatively busy session. We had a lot of stuff drop. We had a lot of stuff in the morning, and then we've got some Fed speak here later on this morning starting at 10. We'll see how that shapes up, right? We'll see what kind of volatility that potentially gives us here this morning. But certainly expecting for us to have a bit of action here today. And hopefully, right, that means a nice green session. So, yeah, let's get after it here, team. Good morning to all DTR members. Good morning to all DTR guests. Hope you're all having yourselves a fantastic day. Please do not hesitate to ask any questions. My job here is to help speed up this learning curve for you all as much as I possibly can. And I'm going to do that by being, you know, obviously as transparent as I possibly can be, right? Sharing the highs, the lows, the good, the bad, but also talking through all of my ideas as they come together. If for whatever reason something doesn't make sense, you're not sure what I'm doing, please don't hesitate, right? Ask that question, get that, we'll call it lack of clarity answered. And then from there, we're going to be in great shape. So don't fester on questions, right? Get them answered. And I promise you that will speed up your learning curve here as much as possible. If for whatever reason I can't answer your question in the moment, I'll let you know. And yeah, like always, team, I promise feedback is never personal. I just want you all to be successful and to accomplish the objectives that you've set out for yourself. What is unique about DTR is that we are a team, right? We're all in this journey together, but we need to also be selfish in those pursuit of our goals and apply these things to our own personality so that we can maximize our P&L. And I'm here to help you do that. And hopefully, right, we can absolutely dominate the market here today and really kick things off with a tremendous amount of enthusiasm. So let's get after it here, guys. What's the count on ES? Let's start there and hopefully set ourselves up, right, for a strong day. Yeah, spot on, Jack. I think you were waiting for me to ask that question there. So 1 for 3 here to the upside. And we'll call it a doji. And what we saw there, right, on indexes yesterday, kind of exactly like we talked about there pre-market, right? It was a bond market holiday. So relatively quiet session, relatively choppy day, relatively thin volume. So today, at the very least, we need to see more volume than what we saw there yesterday. From a plan perspective, right, not too much is actually going to be changing. We're still targeting, right, that 60-50 bounce or breakout towards and then beyond, right? Or we're looking for a breakdown under 6,000, right, for a move back down towards sort of those lows. Don't know if I have a bias in either direction. Really just looking for a breakout of this consolidation before we get that next leg higher. And with that euphoria, right, that we're seeing in the markets, everything at all-time highs, you know, Tesla flying, Bitcoin flying, Palantir flying, among others. My belief tends to be, right, that markets like to move in the way that causes the most amount of pain before that real move eventually does happen. So today's going to be all about waiting and being specific with what our plan is, so that we're not getting faked out before something moves, right? So patience and being deliberate will set us up, right, for a successful trading day. A bounce play off of 6,000 could potentially be in play. And then we're looking for a breakout back towards ATH, right, this morning. But we need to see bigger volume than what we saw there yesterday, right? No tremendous amount of volume. So if I don't see more volume at today's open compared to yesterday's open or even Friday's open, then I'm going to expect chop until proven otherwise. And if I have to sit on hands and not take any trades, so be it, right? I'm not going to allow the market trick me into taking a trade just because I'm craving action. I'm here to be deliberate and specific, not to be some sort of impulsive a-hole. And then same thing here to the downside, right? A fake out at or around all-time highs, right? So around that 60-50 area, has space to break down towards 6,000, but ultimately would like to see that 6,000 shelf act as support for then, a next leg higher. Last time Trump won the election, a slightly different market environment, but indexes ripped 10% higher. And if we are getting that kind of like short squeeze opportunity between now and Christmas, that would not be a particularly surprising move if it does come together. A lot of our internals are telling us that we do have that upside potential. So let's see if it does sync up and we can get that oomph. All right. NQ, what's the count here? Yeah, 3 for 3 here to the downside, but it's a weak 3 for 3, and it's not exactly impressive volume, right? So I do want to have a little bit of flexibility here in either direction, but I still want to apply a stricter volume standard than what I saw yesterday, right? So if I'm going to play a breakout towards 21,350, I want to see bigger volume than what I saw at yesterday's open. And it wouldn't necessarily be surprising to see more volume than that, right? And then plan-wise, not much is changing. That 21,350 is still our target. And then above, right, we kind of have it mapped out already. To the downside here, we need to get under 21.1. And again, need to see more volume than what we saw yesterday. Because if yesterday was a chop day, right, and that volume standard wasn't enough to give us that quote-unquote strong trending price action, less volume than that isn't going to be particularly enthusiastic. And so I need to see that relatively increasing momentum to invalidate that indecision. And then from there, right, again, our plan isn't really changing too much here. We're still looking for basically a breakout away from this 3-day consolidation. All right, crude. 2 out of 3 here to the downside, right, with volume. And this will be our strongest scenario here, right? Strongest looking candle. That's paired with a consistent volume profile. So I don't have any flexibility to play this in either direction. I'm looking for downside narratives only. And if we get a rejection or a fake out off of 70, that certainly would be a good indication for a breakdown back down towards 68. That's where we got stuck yesterday, right? And then under 68, we have space down towards like 66.50, 66 and beyond. And maybe even like 65.50. So we'll see how this thing shapes up. But crude, we're going to be we have the strictest scenario here, right? And then on the indexes, we need to see basically volume step back in and really defend those areas before we're willing to be aggressive. All right, Apple. It's going to be a 2 out of 3 here. Weak 2 out of 3 to the downside with volume. So a little bit of a pullback there, but we saw a tremendous amount of dip buyers inside yesterday's range, increasing but non-outlier volume. And so we still would like to see a resolution of that price action. There's a bit of a gap for us to fill above 225.50. So that's going to be the starting point here. And then just because it's weak, right, we don't really have a dip buy scenario for bearish. So we're going to be looking for a breakdown here still under that 221.50. And then just as a starting point, right, needs more vol than yesterday. So if we're going to invalidate that bearish selling pressure, we want to make sure, right, that we are getting more volume than what we saw. So there's 2 ways for me to invalidate that selling pressure, right? We either invalidate it on volume, or we invalidate it by making higher highs or making lower lows if it's a bullish scenario. So today, we'd like to see both volume and higher highs step up before we're aggressive. All right. Tesla, a weak 2 out of 3 here to the downside with volume. Or sorry, to the upside with volume. And we're looking for maybe a 330 gap, or a 330 bounce, or a breakout over 360. This thing is crazy. I'm disappointed I don't have more of my portfolio in Tesla, but again, that's just FOMO, right? It's trying to get me to chase, and I'm not going to chase at these levels. So a little gap fill and go wouldn't be disappointing. And certainly what's at least optimistic here, right, is that it's a consistent narrative with what we're seeing on the index level. So most of our leading names here are telling us a relatively similar story. So if we see volume return here in one direction or the other, and it's consistent across the board, we can go from there. All right, Microsoft, technically a 3 for 3 here to the downside. And we're looking for a breakdown under 416. Right, and because it's a 3 for 3 to the downside with a strong candle shape, I don't have any bullish flexibility here. I'm looking for downside continuation only, right? Or so 416 breakdown or a rejection off of 420. Nice. All right, Amazon possibly starting to give us potential little bit of a baby bull flag here, right? Consolidation, red candle, decreasing volume, right? Gap up, so 1 for 3 here. We'll call it a possible bull flag. And so 1 for 3 here to the downside. So we're looking for a breakout over 210. Or, right, we want to invalidate this bull flag by breaking down with some conviction under 205. Now, ideally, we'd still get one more point of contact, right, on both the lower end and the upper end of this trend line. But let's see if it can give me that oomph. Okay. AMD. So, gapping down 5 cents. Looks a lot like Apple, right? Lower low, lower high. So it still need to break down under 145 now. And then if we get a breakout back over this trend line support, it's a little bit unlikely here today, right? 2 or 3% away from giving us that pop. But if 150, right, starts to act as support here again, and volume shows up, then that certainly could be a reason to basically invalidate Suresh. Dude, you're $50 offside. One thing, man, so this is a bit of a theme here with your trading, Suresh. I don't mean to call you out very aggressively, but similar with that Palantir trade you had the other day. So you keep shorting on 3 for 3 breakouts, right? So if you have a bearish setup, wait until you get some sort of confirmation that bears are in control. The momentum here to the upside certainly does not indicate to me that there's really any element of bearish control here as of yet. So I would be very pessimistic, right, that is the path of least resistance here at the moment. You need to see bulls fail before you're going to start shorting these big pops. Otherwise, it's just very expensive because you're in a bit of a short squeeze situation here. And I would be very, I would think about changing basically how long you're looking to go. Yeah, price action can be extended. That's fine. But it being extended is your setup trigger, not your confirmation, right? Because price action can remain irrational longer than you can stay solvent. And if it keeps making higher highs, if it keeps breaking out on quote unquote extended price action, then that's actually a good narrative of continuation, not of a reversal, right? So like Palantir, you shorted at 40, it's in the 60 handle now. right? So wait until you get some sort of confirmation that bears are back in business instead of just jumping in once RSI or something along those lines or Bollinger Bands are extended. Wait until you have some sort of confirmation, because otherwise you're going to spend a lot of time in the red and you're going to get really bad entry prices. So I'd like to see that get changed here pretty dramatically, because you're very consistently shorting too early. And don't allow the euphoria of the market make you think that things are going to reverse right away. So NVIDIA here, right? 2 out of 3 to the downside with volume. Not tremendous volume, right? So could very easily still pull back and break down. So we're still looking for that 150 pop, right? That hasn't changed. And then under, right? Looking at 143.50 breakdown. So price action being extended, right? Or, either direction is a setup trigger. You still need to get confirmation of that being the case, right? So I don't want to be shorting a rocket ship higher and trying to catch like a falling knife if I'm bearish, right? Or trying to fade a rocket ship, right? If it's on the upside. Wait until price action stalls. You get bearish reversal confirmation on increasing outlier volume and a candle that looks like 1, 2, or 3 here. It's very expensive to try to front run those ideas. All right, Meta. Double day of consolidation, so still inside that Thursday range. So still need to break out over this pattern high. And it's a weak 2 out of 3 here to the downside with volume. So a breakdown under 675, right? Certainly could make sense. Sorry, 575. Could have an opportunity. But again, right, needs more vol than yesterday. All right, beautiful. Okay, Netflix. Green candle, increasing non-outlier volume gap up. So 3 for 3 here. Give me a little 800 breakout. We're going to look for an 808 breakout, right? And then no bear case here today. All right, Google, double inside bar here. And so we're still looking for that 182 breakout, right? Or a breakdown here under 177. And just needs bigger vol than yesterday. Cool. And then VIX hanging out 15.17. So not a tremendous amount of enthusiasm here, right? Volatility has kind of disappeared a little bit. So we'll see if we get a nice level of momentum here this morning. And hopefully, right, we can take advantage of whatever price action is available to us. Any questions here, team? Any questions? No, Juan, because the volume is still increasing, right? So on Netflix, the standard here is, do I have a green candle, right? That's count 1. Is the volume increasing or decreasing relative to previous bar? That's count 2. And is it gapping up or gapping down? So we do have increasing volume, but it's not outlier volume. So we're going to want to see an increasing volume standard if we're going to trust this narrative. Excuse me. So, okay, market just opened here, team. I'm going to go make myself a quick cup of coffee here before we really blast off this morning. And then we'll jump back on just in a minute or two. So bear with me here for a second, and I'll be back in a second. All right. So, how do you feel about this morning's? How do you feel about this morning's volume here to start the day off? So 22 spot 565 versus 21 spot 397. So we do have increasing volume here on ES, and then on NQ, right? We've got 9.296 versus 9.155. So we do technically have increasing volume here across the board. And we're going to want to see if we can get that nice standard here this morning. So we do have flexibility here early on both of our index names, right? And now we're just looking for that consistent narrative to show up to see if we can get some nice continuation here this morning. So just to go back to it, guys, right? Having a setup is only 1/3 of the equation, right? So having a setup here to the upside or to the downside, either on the 5-minute time frame, right? The monthly time frame, the weekly time frame, whatever it might be, that's only 1/3 of the equation. So we always want to make sure that we get confirmation of our narratives, right? And then that we have a good enough risk reward to justify our pullback or our breakdown, right, for our entry timing. So we got to make sure that all three of those concepts are working in unison on a day-to-day or trade-to-trade basis if we do want to find that long-term success as a trader. So like our interpretation of price action is relatively meaningless until we get confirmation of our narratives. Otherwise, we're going to really struggle to get nice PA. right? We don't want to spend 10 minutes, right, if we're short, or 15 minutes if we're long, or whatever it is, hoping that our idea was correct. We want to be green almost right away on our trades, because if we aren't, then what else are we wrong about, right? So if my entry isn't just about perfect and I'm not getting the exact follow through that I'm expecting early doors, it's hard for me to believe basically that my idea here is fantastic, right? So having good entry timing is very, very important, and we maximize our opportunity, right, or our potential for good entry timing by waiting for confirmation. So just because we're trading on a monthly chart or a daily chart or a 4-hour chart doesn't mean we skip those steps. We use those steps so that we have a positive expectation of our ability to be profitable. When we skip them, then we start to get like emotionally attached to our position, because irrational price action relative to our thesis makes us feel our worst insecurities, right, about our trading. And when we start to feed in to basically those thoughts, doesn't go well, right, long term. We start to make irrational decisions that don't really set us up to be successful. So I would demand from everyone here, right, that they take that seriously, because it's just a form essentially of proactive risk management, where you're not putting yourself up, right, in situations where you're going to blow up your account or do something stupid or do anything along those lines. Your long-term bias might be correct, right, or even your short-term bias might be correct, but if your timing is wrong, then your idea is wrong, right? So having a good setup is one thing, having good execution is another, and we need both of those elements to work together if we're going to be able to execute our edge consistently. Does that make sense? And yeah, good morning to everyone, right? Hope you're all having yourselves a fantastic start to the AM. DTR guests, right? If you're here for the first time or the 5th time or whatever it might be, please do not hesitate to ask any questions. I promise you, any feedback I provide is designed to help make you as profitable as possible, and it is not personal. I want you all to be able to outperform the market and do everything that you desire. And I'll do my very best, right, to be as transparent as I possibly can be in not only what I'm doing, but yeah, in sort of the process of how I get to my ideas. Okay, so far, no increasing volume standards here, right, on any of our leading names. And our CL, not a strong enough candle to justify that idea. So still remaining relatively cautious here today. Yeah, Brian, great question. So the ORB is what this green box is. It stands for opening range breakout. So it's a visualization of this strategy here. And this is what I look for on a day-to-day basis with my trades. So the ORB is the high and low of the first candle of the day on each time frame. So the ORB on the 3-min is different than the ORB on the 5. The ORB on the 5 is different than the ORB on the 10, etc., etc. And the base thesis here is that the first candle of the day is like our zone of compression or our area of consolidation, and we're looking either for breakouts above those areas of consolidation or reversals, right, above or below. No tech issues here this morning. Everything looked good. Fantastic. Okay, so still no increasing volume standards here on either the 3 or the 5-minute time frame. So no active confirmations here. We've got some setup triggers, but no confirmations. It's a bit of a mixed bag here, right, on our leading names. VIX fading significantly, so 14.87. It was like 15.17 at open. So that maybe gives me a little bit more confidence, right, of us getting a trend day to the upside, right, versus a trend day here to the downside. What we might be able to get, something I've been looking at a little bit here recently again, is this low vol pullback idea. So if we get these breakouts, right, above the opening range, but they don't happen on volume, if we get weak pullbacks into like a VWAP or the upper end of the range and we find support off of those zones, that could ultimately also be our entry logic. So that might be something that becomes a slightly larger piece of our execution puzzle here going forward, but we do not have that active here yet. And obviously, we'll talk about it as things come together. The idea, right, what I like about VWAP is it gives me a binary entry target. So, once we find support off of that area, VWAP is a specific price, and we can use that as our entry zone. What I'm going to be doing here, I mentioned this in the 5 things I posted on Friday, I think it was, about making entry timing a little bit more binary once we've seen elevator away, right? So either going to be looking at pullbacks into the low of my confirmation candle, right? If I have the aggressive entry technique, or the high of my confirmation candle, so basically a retest of support, or look for a pullback into the 236 fib line. I'll break down obviously which example or which scenario I'll be looking at there in the moment, and then just making sure that that pullback happens gently, right? Now, a gentle pullback is a relative term, and it would be something that like you just need to practice basically seeing it. But the idea here, right, with your entry timing or your execution technique is to make it binary, right? So if you're struggling with hesitation, or you're paranoid, right, that something might happen, be specific in your entry timing or in your entry zones. And that specific could be a multitude of things, right? So say hypothetically, now this is not a trade, right? Let's say hypothetically that you're looking for a breakout here towards this 46 area. Well, anywhere under this 236 line would theoretically be a good entry zone, right? You get good enough risk reward to justify that. Well, based off of that information, you'd have 3 spots where you could get pretty objective, right, entry timing locations. So either do it on a retest of this 236, a retest of this breakout candle low, right, or a retest of the opening range. And all 3 of those areas are going to spit out for you a specific entry price that you can then sit and wait for. Either it hits that price or it doesn't. And you can kind of pick and choose, right, which technique or which variable you want to kind of focus on to set yourself up with some success. I just deleted my plan. So we'll obviously break down those scenarios, right, as they come together here. Like, for example, crude this morning. This is now the best setup we have here this AM. starting to look at this a little bit. Stop loss as is would have to be 68.83. Now, I would anticipate this to still get retested before it makes that lower low and continues to the downside here. So I'm going to be a little bit cautious. Okay, that's definitely a good elevator down. All right. So stop would be 68.83. So now let's start to set this thing up, right? And again, we're going to be a little bit patient here. If a trade is strong, it'll give me more than one chance to enter, right? I don't have to force this. I don't have to rush this. And this would realistically be a 5 contract position. And so I'd have 2 potential binary entry opportunities based on how things are setting up here, right? Either a retest, that's the wrong line, retest here of previous low of day, so 68.80, right? Or a breakout away from 68.73 and then a retest of 73. So I'm gonna have my limit order set up, right, at 73 here. And then I'm going to look for a pullback above that area to basically improve my risk-reward ratio on this trade. Okay, and at 73, right, I'd be risking 10 points or 10 cents. So I'd be buying 5 contracts here, 5 contracts. And I'm selling short, right? Not going long. Still being very patient here. Not sure if I've gotten that elevator down under that 68.73, right? So no reason to be aggressive yet in this entry. Right when we first started looking at this setup, right, the first thing we said is it's likely going to want to retest, right, that high and then make a breakdown. So we're starting to get that retest here now. And let's see if we can get that separation. Okay, ES and NQ not particularly moving here yet as of this morning. Okay, so a bit of a mixed bag candle there, I would say. We've definitely seen it break down after those types of candles. Still no reason to have jumped in here yet. Now, had you made your entry target to be that 80 area and you made that binary, okay, you're in. You've got a good risk reward ratio. You might get good follow through here. But my plan right on this trade was get that elevator down under 68.73 and then a pullback into that area. So we haven't seen that happen here yet. So I'm happy to be patient and specific. And again, right, each technique is going to have its own pros and cons. So don't like FOMO yourself into something, because there's good and bad things with everything, right? So there's a new lower low. $651, or sorry, $951. And if this thing makes a dramatic breakdown here, right, then I could potentially set my stop loss to be 81 instead of 83. And then change my entry zone as well. Again, still don't think I've seen that elevator. So that's why I'm being very patient here. Yeah, or NQ breaking out. Not on volume yet. Okay, let's see if that 83 holds as support. Yeah, so I use what's called volume candles here, Brian. They're the same as like traditional candlesticks. They just give me a fat appearance for when you get big volume associated with it. So it just makes big volume bars kind of stand out a little bit more. So again, so far a good decision to have not jumped into this here yet. Made what we wanted to have seen be binary, and it didn't quite give me that exact reaction, right? So good decision here so far. Okay, we are creeping up a little bit towards economic data here in a second. Or the start of the Fed speak, I should say, not economic data. So again, still being very patient and cautious. Yeah, 5 min, not a good enough candle. 3 min, I would have liked to have seen hold above high a day. So it rejected where we've seen it reject previously, right? So I would say that's the missing ingredient. Okay, so this could possibly be the low vol pullback idea we talked about. Same thing, stop loss at 89. Or stop loss would be higher this time, sorry. It's like we almost waited for that fake out to happen first. And then we're giving bears a chance to reclaim. Nothing about that green candle tells me that my idea is wrong. But I also want to make sure that my timing is correct. So we'll keep an eye here still on ES and NQ for sure. Yeah, it's nothing here. I mean, if it maybe made a higher high above our confirmation candle, then I would have reasons to be pessimistic about its quality. But it got stuffed at the opening range low, got stuffed at VWAP, and it's kind of an indecisive candle on low volume. So that tells me, right, indecisive bulls, which doesn't necessarily invalidate bears, but I want to make sure that I'm still correct on my entry timing here. And then with the indexes, right, I'll be back to watching them a little bit more closely here at 10 a.m. So in 2 minutes, if I don't get an opportunity here on CL, then the indexes will start to be a little bit in play here. Then the alternative, right, on this low vol pullback would be stop loss 69.04, entry above 68.90, right, which is VWAP and opening range low. That would potentially be interesting. But this has not been a particularly interesting session here as of yet, right? Indexes aren't really moving much. So I'm not getting too much evidence of needing to be hyper aggressive here. Again, I do think crude looks to be probably the most tradable so far. But I'm not ready to pull the trigger. Happy to just drink my coffee and be very patient. So a little inside bar again. Doesn't kill me. Wouldn't say it makes me either, but doesn't kill me. So we'd like to see hold above 2140, right? Kind of as our starting point, or I'd say maybe even 2143. ES looking less appealing. So again, this kind of just fake outs at those highs. This doesn't feel particularly optimistic. All right, didn't hold again. Again, low vol pullback. Stop loss high of our confirmation candle here. And So if that's the case, right, stop loss at 69.04. We're going pretty small sizing here, right? You're buying 3 contracts. Again, so far, not the correct reaction. Again, all we've done here so far, right, is avoid what would have been hair pulling PA. It's a better rejection at 95. So far, so stuffy. So again here, we're back in business. Okay, so definitely starting to see elevator down here. Absolutely. But there was no obvious entry to jump in there yet, right? So no reason to be hyper aggressive. If this thing continues to behave as is, in a minute and 20 seconds, we can reset up, right, to have our stop loss, I don't know, maybe here-ish. There is no rush. Okay, NQ and ES starting to break down here with some potential conviction. NQ, I'd like to see it hold under 200. See if he can do it. So a few minutes to go here. Things are perking up a little bit. Yeah, it does, which is like approximately low of day. It's maybe starting to feel like the indexes are the slightly better opportunity. And that would be ES more so than anything else here. NQ possibly on the 3-min, but it would have to get down under low of day. It's a bit of work to do. So let's start looking at ES here now, right? So stop loss 626.50 or 602.650. So as is, right, I could potentially buy 5 units here. Okay, so now my entry target's going to be on a retest of low of day here, right? And that would be a 4-unit play. Okay, now would be 623.25. Which again, be sizing down then. That'd be 3 contracts, right? I could potentially play this on the 3-min time frame too. So 625.50 stop loss. And an entry above 622.50. So again, that would still be 3 contracts. So let's see if we can get a pullback into that area here. Keeps getting close. So I set my limit price to be 622.50. So I want to be specific in my execution, right? So again, still so far no entry. Might be back at that 626.50 stop loss now. So 620, 625 stop. Again, still no reason to jump in here yet. Lower low, lower high, not a great candle. Not sure if I'd give it that much power yet. You know, our base assumption here today, right, was a chop day until proven otherwise. So I'm not sure if we've seen too much different than that. Not enough volume to indicate that it's a tremendous bounce, but also not a good enough reaction to indicate that we're going to get a trend day here that we're looking for. So again, now we might be back to looking at crude here. With something like this. Okay, so back to CL. Stop loss 84. Okay, so watching closely here, watching closely. If this thing can break down, then I can maybe have my stop loss even tighter, right, than that 84. So I'm still looking for a breakdown through this confirmation candle, right? So we've basically just been stuck inside that candle's range, and there's no reason to jump into this yet until I get a separation away. So again, if it does break down, then I could possibly have my stop loss to be 79. But still, so far, so patient, right? All I've done here so far today is talk myself out of what would have been stop losses. So I'm not falling, right, for the trap of the market. And I feel like that's the first thing we said when we started today off, right? Or one of the first things we said is that when there's this kind of like mass euphoria, it wants to cause max pain before it makes its real move. So with all this chop here so far, I wouldn't say we're too far away from that max pain scenario. All right, so now, right, we could set our stop loss 79. And you're looking for a pullback gently into 70. So my limit order price is set at 70. 5 units. And that's a point of confluence here today, right? That's both low of day and the 236 fib level. So that's why it's interesting. Okay, and just give this candle a second here. Again, still not the correct reaction. And how do we know it's not the correct reaction, right? Because post-entry, it gave us a candle that looked more like a least bearish than a most bearish, right? So again, talked myself out of taking a trade that would have been a potential stop loss. We're working in overtime, right, to not get, well, when I say limit order is set, Ben, that all that means is that in my order window, I've typed in that price. I haven't clicked submit on that order, right? So all it means is that I'm not using a market order. I'm setting my price in my order window to be that price. Right? Because everything I do is based on getting my position sizing correct, right? So if I'm building my position sizing off of 68.70, I want to make sure that I know how much I'm risking before I ever click submit. So once I identify a possible entry target, I set that as my limit price, set my stop loss, and then I can decide how many units I'm buying, right? But that doesn't mean I'm clicking submit. Right, because I'm still waiting for that reaction. So everything always, right, is built out from a risk management perspective first. And the only way I'm going to know what my risk management actually needs to be from like a dollar perspective is once I have a potential entry target in mind, right? Otherwise, I can't make that calculation with any precision. So that's what that means to me. So I'll then lock in my position sizing, right? Once I say that, and then try to time a good entry by waiting for a correct reaction either into my zone or a overreaction above that I can then sell and get even better risk reward. So it's like a way of gamifying my risk, right? So I didn't cancel anything, I just didn't click submit. But I set my order window. I want to make sure I know what my parameters are, and then I can go from there. Is that understood? Everyone understand what I mean by that language? So yeah, the only way I can be confident in my... Well, I'm looking for the correct reaction to my pullback, Brian, right? So the way that I describe it is elevator down, stairs up. So I want price action to move quickly in my direction and then pull back slowly into my perceived entry area. What we got, right, on the CL candle is as it was starting to pull up, Well, the candle closed, and it closed as a non-strong looking candle shape, right? Ended up closing as a least bearish candle versus a most bearish. So if I'm asking myself, what do strong bears look like? Well, strong bears wouldn't look like the weakest bearish candle, right? So that candle close ended up being a reason, right, not to jump into that trade. So I'm very confident I said, wait for the candle to close, right, as we were looking for that pullback opportunity. And it was wait for that candle to close because that candle shape wasn't strong enough, right? So I will always tell you when I'm starting to look for an entry and when I click submit. And it won't ever be a surprise for when I've entered a trade. So although this is now what would have been under my initial entry price, I would have been stopped out on this trade before it ever gave me this move, right? So we reset, we wait again, and we be specific with how we want price action to behave before we ever click submit. So far, 0 trades here yet. And I feel like on all the trades I could have taken, I probably would have lost money on all of them so far. So all I've done is just talk myself out of obvious mistakes, which for me is a nice positive. Okay, so again, back in business here, potentially. And what we're looking for here, right, is a close under that previous area of resistance. Right, so we need to see that get invalidated in some context. That's 61. We've yet to hold under it. So I've done nothing yet to invalidate, right, this thesis. So again, I'm being tremendously patient. we've seen here so far, it's pretty choppy PA. So we're looking for a hold right under this. And then we can target a move towards 68. This is one of those days where you would have maybe made money if you weren't trading with a stop loss. But that's like a BS lie you can tell yourself, right? That only costs you more money in the future. So for now, still being tremendously patient, being very cautious. Not rushing into anything here. We got 20 seconds left. All right, decent close. So let's see if we can now get it. Stop loss would be 61. Okay, so starting to watch here. 55 is my target. Okay, so starting to look for an entry. Okay, and I am in at 57, 68, 57. It's close there. And let's see if this thing can break down. And I have 8 contracts. Okay, just took the stop. And that was a $400 loss. A little shake and fake here, potentially. It's pretty frustrating. And that was mean. Okay, again, we have another setup here on the 5. Same idea. It's back at my original entry price, which is mean. And again, we're targeting a move towards 68. So stop loss now would be 68.60. potentially you could do this. 68.70 stop, but I'd prefer the tighter stop loss. So a little bit ruthless with that first one. Okay, so again, watch for that lower low, and then a pullback into low of day, right, as your possible entry target. I can't believe I got shaken out of that. Okay, too fast of a pullback here so far. Where do you see that, Raim? I don't see VWAP anywhere near this. VWAP is this white line here, right? Okay, so no entry here yet. $10.33. Yeah, I get that. What you have set up here, right, is the electronic hours, which is not what I use. Just use the regular trading hours. So we've got different data sources, right? Well, it's not, I guess, that is what it is. What I'm skeptical about is the quality of the volume here. Now you have a possible VWAP bounce, like low vol or low vol pullback type scenario coming together here on NQ. It'd be something like this. Now 10-point stop loss on NQ would be fantastic. A little bit frustrating to get shaken out of that ES trade. Hey, Joe. Well, welcome. Good bounce. So 207 would have to be the stop. And you want to pull back into 217.50 or lower. And we're targeting high of day, so it has to be very, very tight risk reward. I still can't believe we got shaken out of this CL. That's so mean. Again, on this 10-minute, could be back in play. Nice, Cordell. Hopefully it works out for you. Still think it would need to be 207. Oh, that's so mean. Okay, well, here's your NQ pull back to 207 again. Potentially could be 2. Nice, Clark. Well, that seems like it's working out well. Okay, 10-minute candle close. All right, let's take another look here. So 68 would be the target. Again, 68.50 stop loss. Okay. Okay, I missed it. Again, back to focusing then on NQ. Okay, so looking for a pullback into 217.50 or lower. I might have just missed it. Still not in. Okay, come on, come on. I have a partial fill here. Not a full fill. And it's a partial at 217.50. One contract when I'm trying to buy two. Okay, I'm going to close that position and reset my order window here. And buy discounts potentially. All right, so I'm back in here, guys. Now proper sizing, two contracts. Average price 214. 214. All right, see if we can go here. All right, there's the stop. Oh, it's a little bit unlucky here today. So that was minus 280. My net loss in that position was actually less because I trimmed that partial fill. So all in, probably close to 200 bucks. Can't believe I got shaken out of this CL. And now potentially out of NQ as well. Where did it go to? 200. So 7 points off of my stop. That's... Maybe it should have been this 297. Or 191. Again, done a pretty good job here of losing small so far today. It's kept me alive. But also a little bit annoyed to have gotten chopped out on a couple trades. That would have been green. The CL1 in particular. That's tough. Okay, so now possibly again on ES here. We're targeting 60-10. It's at 10:48. Still a little bit of time here. So mean. Okay, I might have to be back at looking at NQ here in a moment. Torture. Oh. Nice work, Clark. That's a great win, man. Great win. Congratulations. Today it is. Well, I'm glad you had a good plan for it, Clark. I mean, that for me is very positive. You definitely had the right thesis, but we talked about start of the day. If you don't have you have the right thesis, but the wrong timing, you're still wrong. So, got to take that on the chin, unfortunately. This is kind of tempting. $68.06. Oh, I can't believe I missed that. I think it'd have to be like this, though. I think it would have to be like this. So that would be a stop at 196.75. and an entry price at like under 209, right? So let's see how this thing behaves. Okay, so again, watching here. Just buying myself time to make this decision, right? No rush. Watching ES as well. Slight divergence between ES and NQ. Okay, yeah, no entry here. Interesting. All right, so let's take a look at ES to the downside instead. Feels like possibly the smoother setup. Maybe not. $620.50. Yeah, NQ bounced really well off of that 196.50 area. Bounced really well. Okay, I'm back to looking at ES here. So watching short, right? Stop loss 18, or sorry, 20.50. Entry above 18, and I'd be looking at 5 units here. Give me a little gentle pullback. We're targeting 610. Okay, so see what happens on this candle here. Or alternatively, right, we could go aggressive technique again. Yeah, now it'd have to be aggressive. So stop loss 618. An entry above 616. All right, so I am trying to get a fill here. Okay, there we go. So I am in, guys, at 60616, sorry. Oh, and an insta stop. Man, what the fuck? So that puts me at minus 803 on the day. Didn't have time to type it out. I'm still very reasonably within one trade. It's starting to look like a choppy mess. It's just gonna fake out again. I cannot stop getting faked out today. Stopped me out by a point. So yeah, minus 803.90 so far today. Again, still have the same setup. So it's not dead. It's just wanting to cause me max pain. I don't have that back tested, Suresh, so I won't trade it. Yeah, maybe, but I need to back test it before I'm willing to trade something. Okay, so still watching here. Well, everything trends until it doesn't, Suresh. So those absolutes aren't that helpful, truth be told. And crude could potentially have some space down towards 67.50. Although I have my reservations about trading it for a third time. Or committing to it to a third time when it's been painfully choppy on me. What's the time? 11:06. It's a little bit of overtime here. At least ES and NQ starting to sync up a little bit. If that's the case, NQ may be the easier setup to the downside. Too big of a stop loss. 40 points, right? That's too much. Means I'd be risking $800. Just don't want to do. So I'm trying to find a better risk-reward ratio here. I can't seem to find one, at least not yet. Interesting. I know. We're looking at it here. Shook us out and then broke down a full dollar. That's tough. I know, it's tough. That's the way it goes sometimes, right? With the market. We will get shaken out of trades here. Seems to have been a bit more of the theme recently. That's all right. That's the way she goes. Yeah, maybe not. I don't know what they're actually going to say that's particularly interesting. Same type of market we had on Friday, same type of market we had today. I think NQ is really the only thing I would be interested in. So if I could do something like this, stop loss 88.50. Just hyper paranoid of the fake out, right? So I want to be very cautious and patient with this entry timing. So it's a breakdown inside bar, right? And you're looking for an aggressive entry technique under previous low of day. Again, let's see if we can get stuffed. And then crack. Well, for me, no, Suresh. I won't increase the size of my stop loss. Because it's like, oh, if I would have chosen these lottery ticket numbers, I would have won, right? So I keep my process consistent because that's what I know works. The singular outcome or a day's worth of noise is definitely not enough information for me to justify changing. Because then what's going to happen, right? Next time I have a trade, okay, do I make up a random stop loss? Do I pick a random number? Do I place it at the high or low of my candle? Whatever it is. And so I'm unwilling to create that like analysis paralysis for myself. I do the same thing every single time. So again, starting to look here. I can get a gentle pullback. Okay, as is, this would be one contract. If I can get a little bit of a deeper one. All right, so it'll be a 1 contract play. Okay, and I'm going to start looking for an entry here in a second. Let's see this pullback. Might be able to get 2 contracts. It's too fast of a pullback. So see it get stuffed again and then pull back into that red line. That was just a little bit too fast. All right, gonna start looking again here. Now this will be a 1 contract play. At red line, it could be 2. Below red line, it has to be 1. I'm trading minis. But contract sizing should be dependent on your risk management that you're willing to accept, right? So max loss that I'm willing to trade or take per trade is $500 per account. So sizing is based off of that calculation. It's all relative to account sizing. It's all relative to account sizing. But it's define what your max loss is that you're willing to accept per trade. What's the number that breaks you? What's half that number? That should be your max loss. And then working backwards to always make sure that you're trading within those confines. Okay, so again, watching closely here. Okay, guys, I am in short 177.75. Don't do this to me. Stop loss is at 88.50. That's 2 contracts. Might have just been a bit prematurely on this again. Let's see. Come on, break down here, you lunatic. Okay, let's see if we can go. Come on. Okay, there's the stop. Man. What is going on today? All right, I might have one more in me here. And recently, these days where market gets chopped about, I'm getting my getting slapped around a little bit. So let's see, it would be something like this. Maybe stop out low of day. Nice, Greg. Truth be told, I am looking for a reversal here. Might have to start Costanzaing it soon. All right. So stop loss 63.25. Truth be told, I am still only one trade away here. But I don't know how much more frustration I want to take. So 184.25. Okay, so still watching here. Yeah, it's not a bad plan, Greg. Not a bad plan. Again, still no decision to rush this. I almost want to see the fake out happen first. May as well learn. Ooh. I don't get how I've been somehow, and this is, I'll have to make sure this is not just confirmation bias. I feel like I've seen the market well, but also very poorly today, where I seem to be getting the direction right, but timing wrong pretty consistently. I know it's not helpful to anyone. Yeah, that's a fact, Brian. Problem is, I still feel like there is a move in play here. Greg, did you close? Oh, 100%. 100%, Brian. Good man, Greg. Good man. Nice win. Okay, it should be increasing volume here. So again, low a day feels like it's the right stop loss location. Saw the fake out through confirmation candle, which feels good. This is that fake out entry technique we've talked about in the past. Okay, so I'm starting to watch for an entry here long. Okay, that's a good bounce. Spot 8 VIX. It's not telling me to be bearish. All right, guys. So I am long 178.75. That's one contract. All right, let's see if this thing can go. All right, let's see if this thing can finally run. Come on. Here we go. Okay, there we go. Let's see if this thing's got some more follow through here. Get above 200. Oh, having to work today. Oh, don't like that rejection. Come on. It's increasing volume, higher high, higher low. Fighting this a little bit. It's got to run here. Come on. Fly like an eagle. Come on, let's go. Okay, so again, right, we got to see this thing push past 200. And then we're in business. Come on. I believe in you, NQ. $36. Just relentless fake out pressure today. Ooh. All right, well, I'm gonna look to close this, I think. I'm still in. Still in, still in, still in. All right, I'm out. Man, what the fuck? And each time I get stopped, I seem to get a signal in the other direction. That's the frustrating part. I have to trade this. the most fake outs I've seen in such a long time. I can't help myself a little bit. Still feel like there's money to be made. I keep getting signals. I keep getting shaken out of them. This is a get gray hair price action. What do you think, Frodo? No, I don't think I'm on tilt. My losses for the day, very controlled. Don't feel like my heart is racing or my posture is bad. I'm a little bit annoyed, but I don't think I'm on tilt. Yeah, fair play. So 171.50 stop. Might be able to get tighter. Let's see here. $609.55, $68.30. Those look like on the 3. So now stop 158.25. Okay, let's see if it can break down from here. So now it'd be 163 stop if it can flush. Might not. And this might be telling me to go bugger off. $165. Watching here very carefully. Still no, still no, still no. Okay, better reaction, much better reaction. Okay, gonna start looking. All right, guys, so I am in average price 153. Let's see if it can break. Come on. There we go. Okay, let's see if this thing can keep breaking. That's a much better early start here. And I might have just jinxed it. Come on, come on. Okay, it's increasing volume on the entry, so that feels better. So let's see if this thing can break down. Has to close under 150. If this candle doesn't hold 150, I'll just take the $300 win and move. So 10 seconds to go here. Let's see. It's a good reaction. All right, so let's see if this thing can keep breaking down here aggressively. Come on, come on. Oh, you bugger. I'm done there, team. No more. This is too many fake outs at this point to tolerate. Yeah, for sure. And I'm at half of what my max loss is on a day. So it's not the end of the world. It's a frustrating session, but... I got faked out so many times today. I don't know. I feel like I'm losing my mind. Alright, let's do some calculations here. 1, 2, 3, 4. Five losses, jeez Louise. One of the worst days win rate wise I've had in a long time. Oof. Okay. Yeah, no worries, John. It happens, unfortunately. Annoying day, but it does happen. Yeah, for sure. And that's the way it goes sometimes. I mean, a little bit of ups and downs. Unfortunately, the way this market likes to play the game, right? So as much as I wish every trade was a winner, it's not the reality. For the last 3 weeks or so, and maybe, I wouldn't say struggling, but getting more, faked out more often than I was in the prior 8 months. And like, this is relentless. So I kind of feel like I'm in a market right now where I'm not getting paid out to be aggressive. All right, team, any questions here? Any questions? That 600 barrier seems to be a little bit of a sticky spot for me too. So a little bit of an up and down here recently. Yeah, I mean, I'm like 200 bucks away from a max loss too, so. All right, team. Well, same deal like always. If you have any questions, hit me up outside of market hours, and I'll make sure to get back to you as soon as I can. Going to spend the afternoon here just evaluating price action a little bit. Like I wrote in my journal, I'm not sure if this is a change in market personality, where maybe we have to start changing our entry technique a little bit, or if this is kind of just a dry patch of form. So to be determined. Well, we'll come back sharp again tomorrow. Frustrating for sure. End of the world. No. Max, or the loss today was still about the same size as our average daily win. So annoying day, but not the end of the world. So I got to jump on this one-on-one call here, team. Otherwise, looking forward to catching with a few of you here in our one-on-ones going forward. And we'll catch up then. Peace.